Welcome to the Dear Doc podcast, where we will discuss the business of running a dental practice with a panel of experts. Now, your host, Dr. Christopher Hoffpower.
Before we get into the show and introduce today's guest, I would just like to thank United Medical Credit for being sponsors of this podcast and of the business of dentistry. As a matter of fact, they have a special offer for business of dentistry members, 0% merchant fees for the rest of the year, and 30% discount for life after that. You can get that special deal by either going to docoffinvestments.com and clicking on the deals section, or by going directly to www.unitedmedicalcredit.com/TBOD. Thanks again, UMC. Hey guys, this is Doc Huffpower coming to you from my studio here in Alvin, Texas. Today, I am joined by someone from United Credit. Brett, how the heck are you in this wonderful chilly day?
I'm doing well, thanks. Yeah, chilly is right. I'm in Las Vegas. It's 48 degrees, which is not normal.
Well, that's not optimal, but you know, it's similar down here in Texas today. It's pretty darn chilly. So, real quick, we're going to introduce to you guys a couple of things. First of all, if you have used United Medical Credit in the past, you may have noticed a change that took place on their website or on the forms that they send you or their emails. And that is United Medical Credit is now United Credit. And we're going to talk about what that means specifically about their different offerings that they now have that they can use to help you as a dentist or your practice or your patients. But first, I'm going to let Brett introduce himself real quick and talk to you a little bit about how he got into this industry, because he's been in the dental lending industry or medical lending industry for quite a few years. So Brett, if you wouldn't mind, go ahead and introduce yourself.
Yeah, thanks. Yeah. So it's interesting. So I moved out to Las Vegas just on a whim right after college. And my first job out of college was working for a company called Dent Supply. And so I'm sure
some of our people may have heard of them.
Yeah. One or two, right? A small little company out of York, Pennsylvania. That's right. Obviously, one of the worldwide leaders in manufacturing goods, right? That helped me get into dental. I mean, it was really important. You start to talk the language. You start to see how an office is run. Obviously, you start to make friends over the years. I started there in 07, 08. The last thing I did in 2015 with them was I was doing dental implants, the AstraZeneca line. And a company called Lending Club calls me and they're like, hey, how do you think all these implants get sold to the actual patient? I'm like, I have no idea. All right. Never thought about it. And you start to kind of train your brain a little bit. And it's like, wow, if I'm selling them for $400 as the manufacturer, how much are they selling these for? Right. And come to find out, it's like, oh, you're single unit, you're multi-unit, you're all on fours or full mouth. Right. I mean, really, really expensive. Very interesting. So I go over to a company called Lending Club, really nice product, especially at the time. I mean, they were sort of secondary to the market behind, obviously, a large legacy lender, right? And then, so from there, I was there for about a year and a half. I helped start Green Sky Patient Solutions, which was a one-off from Green Sky Home Improvement, which still exists today, extremely, extremely large, just got sold to Goldman Sachs, which is really interesting. Then I, started with another startup company called OpenPay as an Australian fintech lender, and now I'm here at United Credit. So when I got over here, it was United Medical Credit, and then we sort of dropped the medical and just became UC or United Credit. So it's been a big change. I mean, we're an 11-year-old company, and it's one of those things. So yeah, I forgot we dropped the medical.
So Brett, real quick, one of the things that you guys did when you dropped the medical is you expanded the options of things that you'll finance. Just real quick, go over that and just cover that in quickness. And then we can talk about tiers and waterfalls.
Sure. Yeah. I mean, really, anything that needs to be financed from a point of sale, like we call it point of sale or point of need, anything that's related to a service is something that we would be interested in. Obviously, healthcare does dominate what we do. I mean, we have 6,500 healthcare practices on our platform, but something as simple as tax relief, timeshare relief, DME, HME, I mean, anything. Let's see, auto tinting, for instance, that's all something that we would consider doing. It's not just relegating ourselves to just healthcare, even though obviously it is the core of our business.
Right. And so, folks, what that means is that United Credit can offer not just financing for your patients, but if you have some financing needs as well, you might want to go ahead and look into them. I know at one time you guys were even talking about perhaps financing equipment. I don't know if you ever ended up doing that or not, but if it's small equipment and you're just looking to get it quickly and you don't want to deal with Patterson and Shine, talk to United Credit. They've got some great rates. And speaking of those great rates, they've also got great approval tiers. And that means that your patients, even the patients who don't have a credit worthiness score that Care Credit would service, which is, your 650, 670 area and above, United Credit can actually service clients down to, I think, a 450. Is that correct?
Yeah, in the 400s. Yep.
So talk to us a little bit about how that's accomplished, because no one else is doing this. And if they are doing it, the doctor takes all of the risk. So you guys are a no risk lender. You take all the risk. Talk to us about how that works exactly.
Sure. Yeah. No, yeah, it's a good point. I mean, we are first and foremost a non-recourse lender. All the products and platforms and programs that we have, it is us taking the risk, which means that we're not paying monthly, right? We're collecting monthly on our end. It's our responsibility to collect everything. And so I always tell people, collecting the 650s, the 680s and above, right? Let's think about a whole credit spectrum, 0 to 850. Honestly, everybody can do the 680 plus. That's why banks are in business. That's why you start to differentiate yourself when a 650 FICO, a 600 FICO comes to the door. Some get approved and some don't, and there's outliers all the time. I mean, so what we have built here at United Credit is a proprietary waterfall system. So it's one application. Okay, we work with a prime lender. We work with a near prime lender. We work with what we'd call a tertiary lender. And so everything happens behind the scenes, right? If someone walks in with an 800 FICO score, the waterfall just stops. It gives an offer. If the primary lender does not pick it up, it'll go to the near prime lender. If it's picked up there, the waterfall stops. It spits out another offer, and it just literally keeps going down. Our goal is to get to 100% approval. I will say it's very, very difficult, but we do run in the 75s, 85% approval when you use the entire platform and you use it correctly. Like, so it's pretty robust.
One of the things that people ask me whenever I talk about United Credit is, well, sure, they can get a person approved who is, at a 500, but for how much? And my answer is always, well, it depends upon a lot of things. It depends not just on their credit score. It depends upon what their earnings to income ratio or their debt to income ratio is, and several other things. Can you walk us through just some of the considerations there so that people understand how complex that issue is and why we can't give them hey, this is the answer?
Yeah, it's not cookie cutter. It really isn't. Your profile looks different than my profile, looks different than my wife's, my kid, like all that stuff. There's no exact cookie cutter way to do it. And frankly, when there is a cookie cutter way to do it, that is when I say to you, Chris, you can take everybody, right? But you're going to take all the risk. That's a cookie cutter way of doing it. Why? Because I'm not taking the risk. I don't care. I mean, the algorithms are built in place to protect, honestly, everybody, right? The goal is to not put the patients into bankruptcy. The goal is to get the offices paid, to get the treatment done, to get the lenders paid, right? Everyone, I always say, everyone has to do well in this situation. It doesn't work if only one party sort of makes out. And what that means is we do lend up to $7,500. The algorithm that we put together with the lenders makes it so you can actually get the treatment that you do want. Our offers are not designed to say, Chris, if you're the patient, not to say, wow, that is such a ludicrous offer. I would never take that. Our offers are meant to be taken. And that's a big thing. $7,500 for a 550 FICO, it's a big deal. If you want to get clear aligner and you're 25 years old and you're coming out of college and you have college debt, and now you're seeing yourself on a Zoom every day with your coworkers, you're like, oh boy, I really need straight teeth to boost my confidence, right? A $500 approval or $1,000 approval is not going to get you there. And that's why it's important. You want to get the treatment done. And quite frankly, there is a correlation between being happy with what got produced and paying your bill, right? I always think about going to a restaurant. Oh, I don't care how much it is as long as the meal's good. When the meal's not good, then I start to really care about the price.
Nope, I completely understand, and I completely agree with that assessment. It'd be interesting to see how COVID has affected the sales of cosmetic dentistry, even in this this kind of sketchy economy we find ourselves in.
Yeah.
Really.
Yeah.
So, one of the other things that I really want you to talk about is what makes United Credit different. Whenever you're looking at this waterfall, it's not something that most people do. And you guys, because of the fact that you do have that variety of banks that you work with, there are times where you're going to beat the pants off of Care Credit whenever it comes to what the doctor's paying. Now, guys, Care Credit's not going to finance a 540 credit score. They're not going to finance a 500 credit score. You're going to pay more than you're used to paying with Care Credit's, prime lendee for those particular patients. But on your higher level patients who have a good credit score, you're going to save a ton of money using UC rather. See, I'm still doing UMC, man.
Yeah, it sounds like a college, right?
Right.
It's you're thinking Michigan, right? Big bowl game.
So talk to us a little bit about those doctor rates and how you guys stack up. Let's say I go in there, I have a 750 credit score. It's always the people who don't need the money who can get the lending, right?
Of course, right.
Talk to us a little bit about what Care Credit charges and what United Credit Card charges.
Yeah, and I'll say this. I mean, we are designed to be, best in class in all the lenders that we work with. So subprime, to near prime, to prime, to super prime. We do want to be the best in each category. It's not like we're picking and choosing where we want to be good at, right? So I'll just give you a quick example. 750, right? Care Credit versus us. The most popular plan that we have is the 12-month, or what we call no interest, right? People love to throw those things around, no interest. We charge 6.99% for that plan. I'm sorry, I think you're on mute. I lost you for a second.
I said, and what does Care Credit charge for that?
99. Yeah. So it's 300 basis points. It's nothing to shake a stick at. It's three percentage points. All right. If you took 3 percentage points across the board, it would be substantial. Like it really would be. The thing to remember though is we really do try to be fair and equitable across the entire platform. So when we are charging more for the tertiary stuff, there's a reason and a rhyme behind it. I mean, the reality is, I think it's anything under a 600 FICO score, it has a loss rate of about 45%, right? So 45% do not pay after there. So I would always ask folks, would you rather take that in-house or would you rather pay? I mean, the reality is it's going to be expensive for those things, but here's the reality. Not many other folks are doing it. Not many other folks are doing it
Absolutely.
in a non-recourse fashion, right? And so the important thing is, assess your time, assess your schedule, assess your fee schedule, right? If you have a hole in your schedule at 2 o'clock and an empty chair, an associate dentist is sitting there, and if you take, think about the discounts you take today. If I'm already doing 20% off to fill a hole, then, what is the difference, right? Be smart with it. Don't start doing blanket, 25% offs, to all 500 FICO scores. You want to be still profitable, but utilize it in the practice where you think you can add a lot of value to it.
So one of the things that I talk to people about a lot whenever it comes to financing and making sure that patients have payment plans and a way to get the work that they need done is this. I was known as the person who went fee for service when everyone else was not, when everyone was afraid to do that. And one of the ways that I did it was by using United Medical Credit at the time, because United Medical Credit, United Credit now, offers me the ability to finance people for less loss than working as a PPO dentist. And now, to give you an idea, if I was financing somebody who had a 540 credit score and they needed mini dental implants, a lot of you guys don't do those. They're great for lower dentures, particularly in a population that can't afford anything else. Better that they have something like that than nothing at all. And so if I'm going to finance that $5,000 case, I'm going to lose maybe 25% of that. So I have to make sure my profits are there, right? But that's including my discount plan in my office, and that's including what I'm going to pay United Credit. And that's if they have a really, really poor credit score. That's my maximum I'm going to lose. A lot of you guys out there are losing 40 to 45%, sometimes more now with the way that insurances are cutting reimbursement. This is magic. It is magic to be able to make 10% more on every case that you do. It goes directly to the bottom line. People like United Credit will help you to go out of network. They'll help you to survive in this increasingly challenging world of practicing dentistry. Talk to me a little bit about what you've seen brought to the bottom lines of practices that have implemented UC.
Yeah, I mean, there's a couple things. One, we do pay the next day, so that's a big thing, right? And so when you're talking about, I mean, really, when we really take a step back and look at it, right? We look at it from sort of a patient's perspective. We're breaking down a really large number into monthly numbers, and think about it. Like, you pay, assuming you have a mortgage, right? You pay your mortgage every month. You pay your rent every month. You pay your car every month. You pay your iPhone every month. I mean, think about all the people listening that go into the Apple store and they see the $1,600 iPhone. Apple doesn't ask them, hey, you have $1,600. They say, oh, it's around $30 a month. That's the same thing that we should be doing. Now, if somebody wants to say, hey, great, I'll just pay for it all at once, by all means, but you're not waiting 90 days for an insurance check. And here's the thing that you can really utilize these programs. So when you talk about out of network, 100%, right? But when you talk about like discounting, I always think about the dentist that has their foot in the door, then patients leaving and say, no, how about 5% off? No, how about 10% off? How about 20% off? I mean, think about it. Our fee is, 6 to 7% for the prime stuff, right? When you start giving away 20% because you're really just want to close that case, if you did it sort of the way that I always preach, give a monthly number. Hi, Chris.
Yep.
It's around $140 a month. Is that something you can afford? Does that fit your budget? What do you need to do, in your life right now in order to afford $140 so you can get the treatment you want? That's a lot less than the 20 or 25% off. And obviously you don't want to be looked upon as like the discount king, right?
Hey folks, before we get into today's program, I'd like to talk to you a little bit about one of our sponsors, DocSites. DocSites provides affordable and effective websites for dentists with no long-term contracts, transparent pricing, and great customer service starting at only $59 per month. They also provide optional online marketing packages to help you increase your online visibility. For special offers, including up to 25% off of your website setup, text podcast to 818-489-9823. Again, that's 818-489-9823. Now, this is a limited time offer, so text now and lock in your savings. Or you can visit docsites.com/TBOD for more information.
People don't want to go to you. Oh, you gave me 25% off. That's why I came here, right? But utilizing third-party finance, you can actually make money. You can set your fee schedules to be comparable to what they are in the area. I always challenge people, call in the small radius, get the fee schedule that everyone's charging. Make sure you're competitive. If you have, 17 degrees on the wall and you feel like your technology is better and you do better work, it's okay to charge more. When you start to break that down to a monthly number, you're really talking about dollars, right? My fee is $142 for this Align case, and his is $145.
Right.
Okay. Right. What's $3 at that point versus what could be $600?
And you make a very compelling argument there, and it's one of the things that I teach whenever I talk to dentists about closing cases and case acceptance. And it's that America does not think in yearly terms or in whole number terms anymore. They think in monthly payments. I mean, guys, even you're a dentist, you have money. Even you, whenever a rep comes in, they don't tell you, hey, doc, this is going to be, $150,000. They tell you, hey, man, it's only going to cost you about the same as £1 a week. And you're going to do more than £1 a week doing this. By the time you're done, you better be doing like 800 crowns a week after purchasing everything people are trying to sell you these days. But the point is, that is how people think. And if you can wrap their mind around a number that they can understand, a number they can hold in their wallet is what I like to tell people whenever I'm teaching them. If you imagine how much that person has in their wallet right now, you can get them to wrap their mind around a number they can hold in their wallet, an amount of money that's been in their wallet at one point in their life. Then they're going to say yes to the treatment because they can imagine that amount of money, being spent. But a larger amount of money, a lot of times, people have a hard time wrapping their mind around a cost like $25,000, but they can wrap their mind around, hey, that's going to cost you $500 a month for X amount of time. So I love that you teach that because I think it's absolutely true.
Yeah. And Chris, we're not reinventing the wheel either, right?
Right.
I mean, I live in Las Vegas. There is a reason why you get casino chips, right? It's disassociating yourself with the actual cash value. I saw something really unique the other day. Higher end restaurants take away the dollar sign. So you say filet mignon, you see 55.
Right.
They take away the dollar sign, they disassociate themselves with the actual dollars. And there's a reason why people do that. It's not just someone thought of it one day and, I'm going to be quirky and not put the dollar sign there.
So talk to me a little bit about the different types of loans. I know that one of the things that makes you guys unique is that you guys are an installment loan.
We are, yeah.
So talk to me about installment loans and revolver loans and what the difference is there.
Yeah, there's a lot of stuff out there, right? And one may be better than the other. I really think it does come down to the individual person. But as a whole, I'm a huge believer in installment loans, right? Installment loan, we have a start date and we have an end date, okay? I think it does give people a peace of mind. It's the same payment every single month, right? Similar to like your mortgage. Imagine if your mortgage worked on sort of a revolver / credit card. Well, I'll pay some here, I'll pay some there. Oh my gosh, I didn't make the right payment, so I'm going to get tacked on from day one. We're an installment loan, and we're going to pay the same exact. I can budget the same exact thing every single month. And so revolver, right? Think of revolver just like it's a credit card. Right. And when we grow up, you always hear from like your parents or someone in school, credit card is the worst type of debt to get into. That's revolver. So when we're asking our patients, right, to sign up for a credit card, right, that's exactly what we're asking them to do. We're asking them to sign up for a credit card that you can use anywhere. Sure, there is definitely some appeal to it, but I always challenge people and say, hey, why would you want to give, Chris, why would I want to give you a credit card where you can go spend it anywhere? I paid for your acquisition costs to become a patient in my practice. I want you to spend the money here. I don't want you to just get an approval and take it around and wave it around like a wand and go spend it wherever you want. I want you to spend it here. And so credit cards, I always also think this is a good one, but I go to Target, right? And they say, Brett, do you want to sign up for the, I think they call it the red card program, big red program. And you'll say 5% off. And my answer is always the same. I don't need another credit card. I really don't need another credit card. 5% is not going to change my world. I'm going to have to sit there and sign up for it. I don't want to do that, right? I don't want to have it in my wallet. I know they're going to target me afterwards. No pun intended, I guess. But
you should go with that
really,
pun. That was a pretty good one.
Yeah, right. But I mean, that's what we're asking our customers or our patients to do is say, hey, sign up for another credit card. We already know just from growing up, credit card debt is the worst kind of debt. And so the big difference for us is we do have the 0%. We call it the same as cash. Right? There's no tricks or gimmicks or gotchas with any of that stuff. We do give 12 months to pay it off if it's 12-month no interest plan. If they don't pay it off, it turns into an installment loan. We don't go back to day one and charge them all the interest, right? That's called deferred interest. We don't do that. So
wait, now who in the industry does that?
Wow, I mean, some legacy folks that have been in there for a long time. I'll let you say
only
the
so
name.
Many times you can say Care Credit in one
Right.
broadcast, so he can't say it, but I can say Care Credit.
Yeah, and it's not that it's a bad thing. It's just the model, right? It's the model. That's how they make their money. It's if you don't pay it off on time, it's called a balloon payment or a cliff payment. They're going to go back to day one, and you're going to pay a lot more money. That's just the reality of it. So installment loans, especially when you're reading credit too, there's really two types. They look at your revolver number, okay, and then there's also a segment that looks at installment numbers. Your car, your mortgage is going to fall in installment because there's a start date, there's an end date. there's no start date and end date to your Amex card. It could
Right.
honestly, it could go on in perpetuity.
Oh,
If
God.
you're,
My Amex card. I buy way too much stuff on Amazon. Between
we
Amazon
all do,
and Amex.
right?
Yeah.
Right. It starts with an A, right? And but if your interest is more than your minimum payment, you're just going to go on in perpetuity. You're going to pay that card forever. I mean, that's why a few years ago, it might be more than a few years ago, but now on the statements they have to say, if you only pay the minimum, you will have this paid off. And if you look at that number, I mean, frankly, I probably wouldn't be alive by some of the time my credit cards come due, right? Or they also give you stop using this card right now. And if you make this payment for 3 years, then you'll be paid off. And that got instituted a while back, but there's a reason why they had to do that, to protect consumers from, frankly, not going into, tons and tons of debt.
Yep, absolutely. Absolutely. So I'm going to let you leave our viewers with one message. Guys, I've dropped the link to United Credit down below. And Brett, I need to get my landing page changed over to United Credit instead of United.
Okay.
I just realized that when I was dropping the link.
Okay.
So you guys forgive me. But I've dropped that link below. If you want to find out more about the really compelling offers that they have, it costs you nothing to sign up.
Zero. Exactly.
And if you don't use it, okay, you don't use it. That kind of sucks for you. It sucks for your patients. But if you do sign up, run a couple cases through them. And Brett, do they have any special deals for the business of dentistry right now? I know that one of them just ended. Are we going to be adding anything else right now, or can I get back to you on that?
Yeah, no, I can get back to you on that. I mean, really, honestly, our stuff is the most competitive that it can be. I mean, again, we're 300 basis points lower than the legacy provider in the space. I mean, that's a third. Right? You're literally getting the most common thing that you're going to use is a 12-month, same as cash. You are going to pay 1/3 less, whether you run it through us or you run it through Care Credit. I mean, it's literally, it's going to take you the same
I mean,
amount
if
of time.
anyone's good, but I'll put it this way, guys, if you don't sign up for United Credit and use them, you suck at business. Just period. You do. You're paying 3% more for no reason at all. Most of your patients
same
don't have
90-second.
credit.
Yeah, it's the same 90-second process. And here's the other thing. Honestly, when you think about your business, you want to think, I want to keep this person as my patient, right? I want them to spend the money here. I just spent X amount of dollars in advertising and marketing, or maybe it was a word of mouth referral to get them here. Why give someone a tool for free that they can wave it around and use it like currency? It honestly, it does not make sense to do business that way.
Yeah, because they can walk next door to your competition and they can go there too.
And say, hey, I got this approval. Can you do it for $250 less? Now it's just really a race to the bottom, right?
I think I'm going to actually entitle this interview, "If you don't sign up for UC, you suck at business."
Yeah, that's a good one.
I like that.
I'm going to let you write that, but yeah.
Right. Brett didn't say that. I said that.
Yeah. But really, we've been at it for 11 years. Our approvals are 90 seconds. It doesn't take a lot of time. We have a ton of features in there. We have an entire, 60-person staff that's been doing this for years and years. I mean, we're going on to our 12th year in business. We're in Orange County, California. I mean, our lenders that we work with are top notch. It's one of those things that, it's one of the, you always hear about the best restaurant that no one's ever heard of. I mean, this is really one of the best lenders that no one's heard of.
Yeah, I think you guys are definitely one of the best kept secrets. I'm trying to tell everybody, but they don't listen sometimes.
Yeah, no, we appreciate it. Yeah.
So guys, when I told you last time we had United Credit on the interview, when I said this will be the last time, very likely that we have an offer for you guys of, reduced costs. I'm in it. They don't have to do that anymore. Their rates are so good that if you don't sign up, you suck at running your business. Go sign up, click the link. I don't know what to say more than that. Now, United Credit has been a sponsor of the Dear Doc podcast and a sponsor of the business of dentistry for almost 3 years now. They help to make sure that we have the staff necessary to run things, to keep you guys entertained with all this great content that you see, and to make sure that you're friends get approved to the group and to make sure that the group is well moderated. I do not make a cent off of you signing up, but I do get sponsorship from the company. So I think that's important to put out there. Brett, is there anything else that that I've left off covering? I mean, you guys have the best rates around. You have the best approvals around.
Yeah, I mean,
What else? I mean, what else is
service,
there?
I really think it's the people that are at this company genuinely care about the company. We're owned by one person. It's not a ton of red tape. When we want to institute a change, we can just do it. We're not publicly traded. We're private. We can make decisions really, really quick. And honestly, we're in business to be partnered with businesses and medical practices to make the end experience just better for everybody.
Absolutely. So how is Matt doing these days anyway?
Yeah, Matt's good. Yeah, I saw him last week. So yeah, he's doing well. He's doing really well. Yeah.
Fantastic. Well, guys, if I don't see you again before Christmas, Merry Christmas and Happy New Year's, and Brett, to yourself as well. Folks, you owe it to yourself and to your patients, to your practice. Frankly, it is your fiduciary responsibility to check out United Credit, sign up, and save money and help the people that you care about. So all for me, Doc signing off.
Thanks for listening to the Dear Doc podcast, your source for the business and legal questions associated with your dental practice. Don't forget to subscribe to the Dear Doc podcast on all major platforms.